And here I'm going to show you a strategy based on an indicator. It's called Fisher transform indicator. It's a tool, it's an oscillator. It looks pretty much like the stochastic oscillator. As you can see, I've already downloaded and inserted the indicator. I'm going to show you real quick here. The period here, you can change it under inputs. 10 means 10 candlesticks, so if you're on the daily chart, then 10 means 10 days. If you're on the hourly, then 10 is 10 candlesticks, 10 hours. So you can play with this if you like for more accurate signals based on what time frame you're on. You might want to lower or increase the period here. Price type, you don't have to touch this. This is the price limit here on the right side of the indicator box, the price displayed here. And for the levels, I added a zero line because that's where you get the signal, except for the overbought and oversold position. Just like the stochastic, you can see it consists of two lines which either move above or below the zero line, and they have extremes, as you can see here. For example, in this area you can see the extreme here, here, and here. So if we look at this picture of the USD JPY daily charts, I think it's a great example here because first you have the indicator reaching an extreme already in this area, which is, as you can see, if you plot a trend line here, you can see that obviously there was an extreme. Let me put a line here for you to see it. See how it was an extreme here, price dropped and then it broke. This area moved to this level of resistance, in which case it dropped again, and when the price dropped below the zero line, price continued down. So and we were in a downtrend. You can see price was moving first sideways and then started to drop. So this indicator tells you about the trend, strength of support resistance lines as well when it becomes when it reaches an extreme level, either below or above. Now if we continue with our second line here, you can see again price start to move up. So if we were to trade in the direction of the trend, we can see in this area of resistance based on this big drop here, we can see that price once again reached an extreme level. If you would put a line here, you can see that this was the first touch, this was the second touch on the extreme area, and price reached all the way up there, started to drop. So obviously you could already trade it here, or you could have waited for the price to start going below the zero line. It's completely up to you, but you should, just like I do, consider the price action. You should look at different support resistance areas, so you don't just jump in on a support. At least wait for the support to get broken in this case, or touch the trend line. So stick to the trend. It's better to do that. That's why I'm only showing you the overbought positions right now, because this is a downtrend. So again, here you can see, and I'm going to show you a breakout here as well, so hang in there. So again, the next trade, once again we can see the extreme level, overbought level if you wish to call it, was reached, and the green line crossed below. Obviously you can set the colors yourself, whichever color you usually like, but as you can see, you need to just focus on one of the lines, because when it crosses from above and below the other one, price starts to move down. So here we can see the trend line held after one day and it started to go down. Here you can see the last touch, price was not at an extreme level. So we can see that there is a divergence now in the pattern that we had before. Every time price reached the trend line before, we had an extreme overbought position and the lines crossed and moved down. But in this case, price was just crossing the zero line from below, which is a call signal. It's a signal for a bullish strength, and you can see that our trend line got broken. As I say in every video, basically, always pay attention to price action. So if you had your line like this and you had your stochastic, or in this case the Fisher transform indicator, you would see that it's not overbought and the trend line here got broken, became support. So this is a good signal that it's a good time for a call option. The trend has got broken. So of course you can use this on other time frames. We can take a look at the lower time frame, see how it looks. Okay, so I have located an area on the hourly time frame. So we were on the daily before, now we're on the hourly time frame, and you can see that price here was trending up, and we got an extreme oversold level this time, price coming down, and then the green line crosses the red line, price starts to move up. And again, you should pay attention to trend lines and support resistance lines. So we can see based on earlier price, if we go way back, you can see the struggle here and then the breakout, and here we can see price coming down, the Fisher transform indicator becoming oversold, signaling a call option when it crossed the red line here. So it depends on how you wish to use this tool. Obviously you can use other indicators as well, but you should use trend line analysis, support resistance analysis, look at the patterns on the candlesticks, the shorter time frames, the higher time frames. So check it out. I'm sure you're gonna like this indicator, just like any other oscillator like RSI, stochastic. So if you have experience with those, then it shouldn't be a problem for you to use this one as well. If you use the price action analysis, then you're going to have better leverage, better entries. You don't have to wait too long and risk of falling into a reversal or retracement when you actually enter the trade. So you get better entries this way. We'll put the links below, as I said before, for the article so you can read it, and for the indicator that I downloaded here. We'll put the links below in the description as well. Thanks for watching. I hope you will enjoy this strategy.